Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Leslie Awasom. He began investing in real estate in 2017 with single-family houses before transitioning to multifamily investing in 2019. Since then, the firm he co-founded, XSITE Capital, has purchased 838 units valued at $168 million. So thank you so much for being on the show today.
Oh, thank you so much for having me. Such a pleasure being here. Thank you.
Yeah, it's great to get you on and kind of go through your story. So you have a very interesting background, and can you go through a little bit about yourself, both personally and professionally, prior to getting bitten by the real estate bug and going full in?
Yeah, absolutely. Like you mentioned, my name is Leslie Awasom. I'm an immigrant. I migrated to the U.S. 24 years ago. From a small Central African country, Cameroon. Just come to the U.S. like most immigrants seeking for greener pastures. So when I came to the U.S., I followed the traditional path, which is taught to most of us immigrant families to go to school, get a good job, and then start working and hopefully save some money and retire at some point. So I followed that path. I followed the path. My mother is a nurse. She pushed me into healthcare as well after I started in computer science, got hit by the dot-com crash in 2000 and had to change paths. So I went into nursing, became a nurse, practiced as an ICU nurse for about 4 years, then decided to go back to school to get an advanced degree in anesthesia and became a nurse anesthetist. So at that point, it felt like I was at the pinnacle of my career in nursing. Because a nurse anesthetist is a very prestigious job to have. It's well paid, nice schedule, nice lifestyle. But I felt like I got to a point after about a year of my career, I felt like I had hit the ceiling of my career growth, and just that feeling of being stuck in this routine of going to work every day, coming back and earning a salary just gave me this uneasy feeling. And then on top of that, as I started my career, I just had my second daughter. So I was spending a lot of time in the hospital trying to make this money, put in all these overtime hours. And I realized that I missed out on a significant portion of my daughter's life. Like I remember coming home one day and I was sitting and observing her tired, and she had started walking and doing all these things. And it just hit me right there that I had missed out on all of our life until this point. And it was because I was spending so much time in the hospital. Because for us healthcare workers, we leave our homes, especially in the winter months. Like right now, I leave my house 5:30 in the morning and I come back at 8 p.m. at night. So I leave when it's dark, come back when it's dark. So just your whole day is gone. At that point, I was like, there has to be something better. There has to be more. I cannot keep doing this for the rest of my life. And as luck would have it, or as they say, when the student is ready, the teacher will show up. I was scrolling to my phone and I saw an article on Yahoo that said the author of Rich Dad Poor Dad has written a book for millennials that are stuck in student loan debt and looking for a way or an alternate path to create passive income. And the name of the book is Second Chance by Robert Kiyosaki. So I bought the book, read the book, and the book was speaking directly to me. It felt like Robert was like a long lost uncle that came back to life and was answering all the questions that I had. So and one of the recommendations he gave on there was to go invest in real estate. So I followed exactly what he recommended, and then things just took off from there.
Interesting. So that was the book that kind of gave you the catalyst for choosing real estate as your investment vehicle, or was there something else between it?
No, it was just a book. It was that book. I had experienced 2008. During 2008 crash, a few of my family members actually lost some homes. So I was actually scared of real estate after 2008. Like I remember I was here in Maryland. There were properties that were selling for $10,000 all cash. I had the money to buy it, but I was so scared I didn't buy it. So I missed out on that because of the fear and the misinformation. But then that book explained what happened in 2008, and explained how the difference between buying real estate versus investing in real estate. So I dedicated my time to learn how to invest in real estate and took the plunge and started investing in real estate, then just grew from there.
Yeah, so let's talk about that. How'd you get first started into real estate, dipping your toe in there?
All right. So after I read the book, one of the things he recommended was going to networking events, talking to other real estate investors. So I went to I signed up for the Baltimore Real Estate Investor Association, took a class on the BRR model. That's the how to buy, renovate, rent, and refinance. And that really that really appealed to me because I've always wanted to be like a long-term investor, not like a flipper or anything like that. So I followed that model and I went and bought my first property. It was a condo in Greenbelt, Maryland. Same model, estate stay sale. The guy that was living there passed away, so the family was selling it. We're able to get it for like a really good price. So did exactly that. Renovated the unit. And I actually took time off work, about 2 weeks vacation time off work, and spent time working with other contractors to renovate that unit. And I really enjoyed that process. Like leaving my house in the morning, going to the unit, working with contractors, putting this vision together, and see that little condo change from what it was to become something else. I really, really enjoyed that process. It didn't feel like work to me. And then on top of that, we did that. I put in a Section 8 tenant in there. And then after a few months, we went and did the refinance. The value had gone up by about $77,000. I was like, oh my God. So this stuff is real, right? So that was like, that's when it got ingrained in my subconscious that this is real. And I just decided to dedicate a lot more time on that and build off of that.
Yeah, that's awesome. It's that proof of concept. And anything you're doing doesn't have to be real estate, but whatever you're doing, once you get that kind of go full cycle where you've done something and they're actually being compensated for it, like how you thought, then you're like, oh, wow, okay, like this is like a money in my hand and like everything kind of went together how it's supposed to. So when you got that and you kind of moved on and you transitioned into multifamily investing where you are now. So can you just give us like a little bit of overview of why you did that? What were some of the factors? Because you did obviously really well in what you were doing before. You liked doing what you're doing, single family properties like that. Why go into multifamily investing?
So that's a very good question, right? I was doing the single family stuff. I had gotten that bug. So my goal was to go out and buy more of those single family units and repeat exactly that. I had this dream of like maybe owning 20, 30 properties and getting all this cash flow. And then maybe I'll be able to scale back from work a little bit, but along the way, as I was building on the real estate stuff, I met my first initial partner, Mr. Tenny Tolofari. So he actually came to sell me life insurance because at that time he was doing financial services. He came to sell me life insurance and we started talking about personal development and business. And I realized that he was into personal development like myself. We were reading some of the same books at the same time. He had read Robert Kiyosaki's Cash Flow Quadrant, which I was reading, and we were both reading the first book on Elon Musk by Ashley Vance. So we were both like fans of like personal development and entrepreneurship. So we became friends. Him and I actually used to meet every Friday evening at a coffee shop in College Park, Maryland. We'll sit down, play Robert Kiyosaki's Cash Flow board game. And through that, we'll learn about each other. So I had to learn his money habits, realize that we think differently when it comes to money and investing. He's a hoarder, while me, I'm more of like a go getter, let's go invest. So after doing that for about 6-7 months, I was still chasing the market, looking for deals, right? So at one point, he was like, hey, you doing this real estate thing. I want to do real estate as well. Why don't we just partner up and scale and do it together? And I was like, yeah, let's do it. So initially we went and put offers. We were trying to buy a portfolio of like 3 or 4 single families and do what we were doing before. Fortunately, we didn't win some of those deals. Then one day he called me. He was like, dude, I'm sending you this audio. You got to listen to it. I'm like, what are you talking about? I said, you got to listen to it. So it was like a short course by Grant Cardone. It's about multifamily investing. Very simplistic explanation of what multifamily investing is, right? And what attracted me to it was the numbers. In single family, I know that I'm buying and I'm renovating. My value is based on ARV. If something happens in the neighborhood, that ARV might decrease. In multifamily, it's all numbers based. It's about the income that you're able to generate from that asset. So I was like, why spend 10 years acquiring 20 properties when I could put in a lot of effort and just buy 20 units at once? That made a lot of sense to me. Then the more I read and understood it, I also realized that there was this model where you could syndicate, right? Bring in other people to invest with you, where you become co-owners of this asset and those people are passive. And when I discovered that model, the first thing that came to mind for me was other professionals that I work with at the hospital, other healthcare professionals that I see day in, day out, doing exactly the same thing that I'm doing. And most of us don't even know that we could do this. Most of us, all we know is that we could invest in the stock market, we could invest in ETFs and all these other funds. We don't know that we make enough income to qualify as accredited investors, and we could actually invest in these premium multifamily assets. So that's the premise of where XSITE Capital was created. Because once we understood that we could go out to our community, especially a community of busy healthcare professionals, a community of immigrant professionals, and educate them about this asset, the excitement is where that name actually came from, XSITE Capital Investments. So that's how we transitioned. And we said, you know what, it doesn't matter what it takes. Even if it takes us 3 or 4 years to close one deal, it's better to put in those efforts and close a 200-unit property in 2 years than to go and start acquiring single-family properties over a long period of time.
Yeah, it's awesome. That's a great story. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. So can you kind of explain currently where your company is? What's your current criteria for investing and your investment strategy overall?
Absolutely. So currently, we've grown, like you mentioned, we've acquired over 838 units over the last 5 years. Something that we truly never dreamed of. We had these big visions, but thankfully, when we came out, our community has received this very well and have been part of all these deals. And we are currently under contract to purchase another 268 unit building in Atlanta, Georgia. Our focus has been on like value add multifamily investing. We acquire 100 plus units. We like to find like B class assets or C plus assets in really good neighborhoods, good locations that have an ability for us to be able to increase the income some way, somehow, with a true value add story, which is an example of what we have right now in the asset that we are raising capital on in Atlanta. So those are the kind of assets we acquire. And there has to be a clear path of us increasing the income, and the location, the market, very important for us as well.
Nice. Interesting. So for the markets, getting down to that question there, I mean, I see you guys have properties everywhere: Washington, D.C., South Carolina, Maryland, Georgia, Indiana. I mean, how can you effectively purchase and manage properties and projects in several different states with your team?
So that's the great thing about this large multifamily assets, because the assets produce enough income for you to be able to hire a true professional property management company that's on site that manage the day-to-day of these assets. So we partner with like some of the best property managers in the industry, and we also try to buy in markets that we just one flight away. Right. And we visit our properties. I am the asset manager on our properties. I visit our properties at least once every quarter, all of our properties. We make sure that we visit. We also buy properties that are not too far from one of us, like Tenny, my partner. He actually sold his house here in Maryland and moved down south because we're buying a lot down there. So he lives in Charlotte right now. He's boots on the ground, goes out to our properties in Columbia, South Carolina, and Atlanta. And the properties here in the DC area, I go there all the time. The one outlier is the one in South Bend, Indiana, which we are partnered with another group that has a lot of presence on the ground there.
Nice. Yeah. The boots on the ground. That's why I was asking. It makes, it makes or breaks the deal, especially the property manager, but having the boots on the ground, being able to overview what's going on, especially if you're doing a value add type project where, you're really working, the asset management, it really is including, a lot of the value add overview, right? From everything, looking at the projects going on, the value, like all the different construction, everything like that.
Absolutely.
So, a lot of things have changed here since you've started buying real estate and buying multifamily. And, really in 2022, we saw a lot of stuff changing with multifamily. We saw rents go a little bit more stagnant after a crazy 2021, the rise of interest rates. I mean, how has your firm adjusted underwriting and your asset management strategies? You have another property right now, 200 plus units that's under contract. So kind of how have you adjusted that over the last couple of years?
So yeah, a lot of changes has happened in the market, and over the last 2 years, which explains why we haven't closed any deal and brought any deal to my investors for the last 2 years as well, except this one. So we stay disciplined on the numbers. It's based on the numbers. Like, numbers don't lie, So we stick to our numbers, and again, the location key, right? We want to buy in areas where the residents in that area can afford to pay the rents for that property, right? We want to buy in areas where there is a projected growth, looking at all the data for like new construction, any new product that is coming into the market, to make sure that we're not going into a market where there's a lot of supply, and we're struggling with that as well. So we make adjustments based on where the market is at, interest rates versus cap rates, So everything goes through like a very rigorous underwriting process to make sure that that property has the value to produce. And because of the changes in the market, we even became more conservative on how we're projecting, especially on like the rent growth numbers. Most markets right now, actually, like I think in the US right now, there's like a 0.7% rent decline average. So we make sure that we look at the specific market dynamics in all the projections that we're doing, and going in very conservative. But this time right now presents like one of the best opportunities that we've seen since we started this business. Back in 2019, 2020, everything was growing, and now things have gone down. Like in some markets, we've seen like a 20 to 35% drop in prices from where they were at the peak. So now we believe now is actually the time to go in and scoop these assets. And we're not the only ones who believe that. All the large institutions, the BlackRocks of the world, are going in and scooping these assets. They have raised significant amount of funds, and that they have a lot high liquidity, and they are very active in some of the markets that we're in right now. So we are hoping to capitalize on that as well, so that we're able to bring some of this institutional grade assets to our busy professional investors.
Yeah, that's great. No, that's a great plan. You touched on before about your team, and how important was partnership to becoming a successful commercial real estate investor, making the decision, because you're kind of by yourself as a single family. How important was it now, the partnership aspect, so to become a successful commercial real estate investor in multifamily?
That's a great question, man. Partnership is everything. There's absolutely no way I would have been able to do the things that I do in multifamily right now without my partners. I was personally blessed to have two amazing partners, Dr. Julius Oni, an orthopedic surgeon who is our CEO, and Tenny Tolofari. Like, we complement each other so much that that has contributed significantly to our growth. And not just that, we are the three founders of XSITE Capital, but outside of that, we partner with others, right? One of the things that we believe in is like, we want to surround ourselves with the best, right? We do not know it all. So we identify partners that have more experience, that are stronger in certain areas, and we partner with them on some of these deals that we buy as well. So for us, we believe strongly in the power of partnership, and we're always looking to identify people that bring strengths in partnership so that we can work with them. There's absolutely no way we can go out and buy a 268 unit building without working with other partners. So so for us, partnership is important.
Yeah, no, it's one of the things is when we venture out of our home market here in Florida, definitely partnership and having partners with boots on the ground that know that and have their connections and network there makes the deal work. Without that, if someone was just like, oh, there's a new market we're going into and you want to be part of it, it'd be something that we would turn down. But having that, the partnership with someone with a network and with that on the ground allows you to really plug into what they already have that's working, which is extremely, extremely powerful.
Yeah, I agree 1,000%.
So one more thing on partnering, I always want, because you have you have multiple partners. And one thing I found with businesses that I've started that I've never really kind of worked out before, or whatever it was, when you're starting a business with partners, it's not really easy because, people need to make money. Usually the business isn't, so it requires partners to have a job or some side business along with the new business you're starting. Now, when you guys were starting, how did you manage to ensure your partners were putting in time at your firm, XSITE Capital, while, I mean, obviously, keeping their expenses paid?
Yeah, so that's a great question, right? And it's like one of those things that I've had to sit back and reflect upon, which is why I say that I am so lucky to have the partners that I've had, because we never really worried about that. All three of us had our jobs when we started, had our full-time jobs while we're building the business, and all three of us contributed to building the business. We came into this knowing that it's going to take a huge amount of effort and financing for us to be able to get this off the ground. So we spent money, at least we had resources coming from our jobs. We use that to invest in ourselves, invest in our business, and build the business over time. It really wasn't until after about 3 years that we were actually able to get some money out of the business. And as far as contributing time and money into the business, that has never been an issue for any one of us partners. So because it's like the passion, the why, the reason why we do this is strong enough on each and every one of us that we get up every day obsessed on how we can make this business move forward. I can tell you that since 2019, when we registered this business, a day hasn't gone by that I have not spoken to my partners, whether it's about business or just about how we could build this and go forward. So it's bigger than business at this point. It's more like a journey of growth, and that we are all walking through together.
That's awesome. Yeah, that's you sounds like you guys have a great company partnership there.
Thank you.
One of the things that you brought up before, and we really haven't talked about it, but obviously I believe is a huge factor, and your thoughts on what we're doing is that, I have a number of friends that are immigrants or, first generation from Eastern Europe mainly, that came and their families left when it was communist over there and they came here. And the first thing I would see with those families is that they'd be buying real estate, starting businesses, a lot of stuff that they didn't have access to, which as Americans, myself being born in America, the United States, it's something that, we take for granted almost, that the ability is there. So how does being an immigrant change your view on the U.S. economy and U.S. business in general, while possibly giving you an edge over other real estate investors that maybe don't see this dramatic opportunity in front of them?
That's a great question. So for us African immigrants, the predominant notion is like when we move to the US, we go to school, get a job. Starting a business is like considered something risky. But here's the piece. Here's the important piece that that question brings up. It's all about what we go out looking for. You got to think about it from the perspective of the immigrant. I'm living some area that I consider troubled, right? I don't have enough opportunity over there. I don't have enough to eat. I don't have the nice shelter that I want. I am struggling. I am putting everything on the line to go to America in search of opportunity. So when we come to the US, our eyes are wide open, looking for the next opportunity, the opportunity to better ourselves, right? We are not bogged down by the political climate or what this person says or what we belong to, or that. At least in the early phases when we're not bogged down by that. All we care about are the opportunities that are available to us. And when we come, there's an abundance of opportunity in the US that we see compared to the societies that we come to. Like when I came to the US, I got a job at McDonald's. I was getting paid $5.25 an hour. I remember calling my friend back home with so much excitement. I am making money. And I was going to McDonald's dedicated, the most dedicated employee, doing about 60 hours a week without any complaints, right? But for an American that has been here, that has been given everything, that doesn't mean anything to them. So I think it's about the perspective that you take. And this is not something that is unique to Americans. It's kind of interesting because it's something that I've really thought about and reflected about. And I see it in different societies, even in Africa. Like, for example, I'm Cameroonian. A Cameroonian will leave Cameroon and go to Nigeria, and they'll be successful in Nigeria. While a Nigerian will leave Nigeria and come to Cameroon and be successful in Cameroon. So it's like that sense of entitlement that we have as citizens of a country, that country owes us something that prevents us from looking at the opportunities. But when we leave that country and go somewhere else, we're looking for opportunity in that country. And when we look for opportunities, we see opportunities.
That's fantastic. That's a great answer. It's a great perspective, which I will keep in mind when any more of that conversation or topic ever comes up, because that's a great way of looking at it. I just always thought, like you were saying, the opportunity, but even going just back between countries, no matter what level they are, it's just you have a whole different perspective of what Yeah, I mean, makes perfect sense. So one of the things here before we wrap up, I always like to ask real estate investors, year 5, going on your 6th year of real estate investing. I imagine you guys have turned down a lot of deals, especially over the last 2 years since you haven't done any, you said. What are common mistakes you'd see real estate investors make?
I think you kind of mentioned it a little bit, like just jumping into a new market without getting a full understanding of like what that market is, the market dynamics, because a market can can make or break a deal. So just jumping into a new market without doing the adequate research for that market is one of the big mistakes I've seen people make.
Yeah, no, that's a great answer. Well, thank you so much for coming on today. How can our listeners learn more about you and your business, XSITE Capital?
All right. Well, thank you so much for having me. I'm Leslie Awasom. Again, that's my name. You could find me anywhere. I'm active on LinkedIn. Instagram is Leslie Awasom everywhere. And you could come. We have a private community. It's called the Beyond 9 to 5 Club. It's a community that we created for other busy professionals that are looking to think outside of the W-2 or 1099 income to build something else for the long term. So it's beyond9to5club.com. Come join us. We give a lot of value on that platform as well. So, and again, reach out to me if there's any way I could contribute to your growth.
Leslie, thank you so much for coming on today. I will put those links into the show notes, and looking forward to connecting with you here in the near future.
All right. Thank you so much for having me. I appreciate it.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.